Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Today, we need to talk about ETFs. ETFs are exchange-traded funds. But today, we need to talk about the disadvantages of ETFs, which is a thing we haven't really focused on before. So first off, where did I get this question from? From the comments. I told y'all in the last video, hey, comment what do y'all want the next video to be about so we get to talk about it. Alright, so I'll talk about what ETFs are, what the disadvantages are, and why these are disadvantages and things you should be aware of. Now, I'll put out a disclaimer. I got the majority of my money inside of ETFs. Okay, I think the benefits outweigh the possible disadvantages. However, and know this, not every ETF is the same. Okay, not every ETF is the same. There are differences here, and we'll talk about some of those differences. And some of those differences could be a disadvantage. Okay, all right. So let's start off. There's really only two things that I see are disadvantages of ETFs. First is cost. I did an entire video on expense ratios. That's basically the cost that you pay for an ETF every year. For example, ticker symbol VOO. This is the S&P 500 index fund for Vanguard. S&P 500, largest 500 companies. Crunch them together, put them into one single investment. That's basically what VOO is. Last I checked, which was like 20 minutes before this video, the expense ratio was 0.3%. So I'm sorry, 0.03%, which means that for $1,000, for every $1,000, you're paying Vanguard 30 cents a year. They can have that. They can have that money. That's fine. That don't bother me. However, that is a cost, right? It is. If I were to say, I don't want to do the S&P 500, but I want to go out and buy 500 stocks, which is not feasible. I don't recommend doing it. But if you're doing it on Public, Robinhood, Fidelity, TD Ameritrade, whatever app that's out there today, you should be able to get it for free. Nobody is paying fees to buy and sell stocks anymore. So I would save myself 30 cents. Is that worth it? I personally don't think so. I don't think it is worth you going out and getting, to save the 30 cents and go and buy whatever companies and do all the research that is required to pull all those companies together and then manage it. That's a very, very difficult job to do. Now, here's the other part. Not every ETF is just 30 cents for every $1,000. Some cost significantly more and have way different results and less diversification. So this one that we were talking about has approximately 500, actually a little bit more than 500 companies inside the S&P 500. Story for a different day. However, that's 500 companies. There are some, and we've talked about these before when we talked about financial ETFs, when we talked about infrastructure ETFs. There are some that have 30 companies, some that have 50, some that have 60, some that have thousands of companies in them. It all depends, and all of those fees and expense ratios are different. So the higher that you pay, the smaller my eyes get in terms of like, why am I paying so much, right? But having a fee for someone else to package that stuff together, to do that research, I'm fine with that. Up to a point, right? So it really depends on what that fee is. If you ask me what fee is a lot and what's a little, I always start at what the index funds are paying and how much further am I paying beyond that, and is that particular ETF outperforming the S&P 500? Now, according to most headlines, the majority is going to be no. I think last I checked, 85% of active managers, so people who run these ETFs that are trying to beat the market or beat their benchmark, most of them don't do it. So that's why the majority of my money is inside of an index ETF. But that's a disadvantage. I have to pay. I don't mind paying the 30 cents, but if I'm paying, a dollar for every 1,000, $10 for every 1,000, which would be extreme. But if I were, then I'd be looking at it a bit different. When you're investing for decades and decades and decades, and you're investing thousands and thousands and thousands of dollars, that starts to add up. When you get your first 100,000, if you haven't hit that number already, do the math. That 0.03% starts to add up. When you hit that first million, that 0.03% starts to add up. If you have a different type of ETF that's paying or that's charging 0.5% or whatever is out there, those numbers change, and you're paying that every year, and you're not paying it out of your pocket. It's just basically you invest $1,000, you're actually technically investing $999 and what 97 or $999.70. That's what you would be investing. That gap, that little 30 cents goes Vanguard, and that's to pay for the convenience of having them package this stuff up together for you. So that's number one. That's cost. Doesn't really bother me, especially for index funds, but it's a disadvantage. Okay, so that's number one. The second one is control, and this is the one that concerns me the most with some ETFs. I would call this one of the bigger disadvantages, depending on what ETF or what type of ETF you own. So going back to the S&P 500, guess what? You don't control what is inside the S&P 500, and neither do I. And yes, companies that are in the S&P 500 do change. For example, I made a big video about this. Tesla was added to the S&P 500 in 2020 or 2021. Not too long ago, they were added to the S&P 500. That's the main point, which means that somebody got kicked out of the S&P 500. I don't control that. None of us here control what is in and out of any ETF, but especially something like the S&P 500. Companies move and change all the time. There are companies that acquire each other, and that shakes up the S&P 500 as well. I don't know if the Spirit and Frontier merger and how that's going to affect the S&P 500, but mergers, adding new companies, subtracting companies, all that stuff I don't control. This becomes more pronounced or more of an issue if you have one of those like trendy ETFs like ARK Innovation Fund. This is the one that's run by Kathy. That's the one that's run by Kathy Wood. I almost knocked my computer over. It was really, really good in 2020, and it's focused on innovation. What are the companies that are on the cutting edge of everything? Well, it hadn't been great recently. And you don't have much control over the ETF itself and what is in and what is out. Now, I got control to sell it. I can just say, hey, look, I don't want this ETF, and I can just get rid of the entire thing. But take a look here, and I'm going to pull it up on my computer as well. I didn't memorize the numbers here. But for example, they added, Robinhood. I have it here. Robinhood, they added Robinhood, and it's down 84%. And this is 2% of the entire ETF. As of the time that we took this screenshot, from the article that I used the screenshot for. So as of the 25th of February, it was down 84%. I didn't ask for Robinhood at all. Now, I don't own the ETF, but if I did, like, none of these companies, with the exception of Tesla, is a company that I would own or currently own on my own. Like, I think I believe in Tesla. Now, I'm not the biggest Elon fan. We've done videos about that. However, I would own Tesla. I would at this point, I would ride or die for Tesla. The stock. We're going to be all right. I'm holding. I'm not going nowhere. But Robinhood, Spotify, Shopify, I do own shares of Shopify. 61% ain't good, right? Coinbase, down 50. Like, I don't want none of this. Outside of Tesla, I'm not convinced about these companies, and I do like Shopify, so maybe two. So 2 out of the 5? 3 out of the 5 I don't want no parts of, and down 50%, down 58%, down 84%. I'm not with that. I'm sorry. I cannot do it. But this is 23% of the entire fund, and I don't have any control over that. And this is a big disadvantage depending on the type of ETF that you have. Now, ARK Innovation ETF in and of itself is down 50%, 49% if you want to be exact, but 50% in the past year. I'm not okay with that either, especially when the stock market is nowhere near close to that type of underwhelming performance. So that is one of the biggest disadvantages. But again, depending on what ETF you have, right? This is just one ETF. I pick on this one because it's one of the most popular, one of the most polarizing for people, but it really depends. So cost of control, those are the two biggest for me. There are disadvantages. Now, again, I think the benefits outweigh the disadvantages. I want to be really, really clear there. But also the last thing that you want to realize too is you want to be really clear that the goals of the fund match the goals of you personally. So for ARK Innovation, they are very focused on innovation, obviously. But if you read their website, part of your research, right? If you read the website, if you go to any of Kathy Wood's talks, she does like a weekly thing on YouTube. She talks about like, hey, this is what we believe. And we're looking at 5 to 10 years. These are the companies that are going to absolutely redefine the world. And if that's true, which I think Coinbase and Tesla have a shot. Shopify, some people say Shopify is gonna take over Amazon or be the biggest player in the metaverse. You might be right. But they're saying like 3 or 5 years is what we're trying to do. If that fits with you and who you are as an investor, you might be okay with this. I'm not the type of investor where I'm trying to get the edge of technology. I'll get some, but I'm not that advanced yet. But if that's your type of investing strategy and that's who you are, then fine. But if you're not that, what you don't want to do is have a mismatch where you're here, the fund is here, and you're trying to force a marriage or a relationship that's not going to work with your personality. If you're somebody who looks for a dividend ETF, usually dividend ETFs aren't going to pay double-digit returns. You're going to get a nice dividend check, you're going to see nice returns there, but it's not going to be something that I made 80% from my dividend ETF. It's not usually what dividend stocks do, and it's not usually what dividend ETFs do. You want to make sure that the style and the composition of that ETF matches who you are and take it from there. But again, my disadvantage is cost and control. How can you find out what is inside of these ETFs? There are a bunch of different places. One, always go to the website. They're going to have that there. Yahoo Finance will give you this information. And then I think the last place that you can check to find out where those things are is ETF.com. They have a really nice website, super easy to use to help you see what's in there, how many stocks are in there too. So that's really it. 2 disadvantages, cost, control. That's really the only things. Personally, I use a lot of index ETFs. So it don't cost me that much, and I don't mind. But no, I don't control what's inside of those. All right, so that's it for me. Talk to you guys later.